gap between the content producers and the audience. Media first from Milk platform will be a combination of virtual reality, blockchain technology, and artificial intelligence. Visit the website metaverse.milk.global.
Hey everyone, how are you doing? So I'm here with my good friend and legendary co-host, Julian. How you doing, Julian?
Doing great, thanks, Reese. How are you?
Oh, yeah, I'm really, really good, thanks, mate. Really, really good. Super pumped. And obviously we've got a big finale coming up tomorrow. So we wanted to bring you guys a nice little bit of alpha. Hopefully you get a lot out of the session. And we really do encourage you to put any requests that you've got. If you've got any alts and bits and pieces that you'd like to take a look at, we're going to take a look at BTC. We're going to take a look at ETH. We can do a nice condensed session. We're going to look at it, just get the charts up, look at it from the TA side of things as well. And then also Julian's going to give you some of his expert input from the on-chain side. But also a lot of people might not know about Julian. He's also an excellent technical analyst too. So we'll have some interesting input on that front. So starting with Bitcoin, as we can see on here. And guys, do let us know in the comments if you want us to just chop off the faces, the cameras coming through to make the screen a bit bigger, especially if you're watching this on Twitter. So what I wanted to start with today, and we got a lot of questions about this when people are saying, if we're in these kind of conditions, when we're chopping around, we're in these ranges, just to give you an example, over here, we can see that we're kind of in this consolidation here. If we kind of draw around this, right, we can see here that price is consolidating here. It's failed to make any real key moves since, obviously, we faced a big drop over here. We had the FTX news, but price is clearly ranging at the moment on the higher time frames. So people are saying, well, how do you know which way price is going to move? And obviously, we never know. But to make an estimation, one of the things that I'm always looking for, I'm looking for where price has taken liquidity, right? So when we're looking over here, for example, right, and this is obviously on BTC, then I'm interested to see if we've swept these lows like we did here, not to mention the fact that we've taken out liquidity below these lows here and here as well, then my feeling is I'm always looking for where price is running to, right? And I'm thinking if we've taken out the liquidity of the lows, then we're probably going to be looking to take out the liquidity of the highs. So thinking of that, I'm asking myself the question of, okay, well, where are the key highs that we're reaching for? So obviously before we've had these candles here, then as we've had this drop, the drop that's taken out liquidity down here, then that would be the first point of interest for me, seeing how we interact with that. Now, the fact that we've had this corrective move down here, this could just be a correction looking then for price to move up a little bit higher, okay? Now, we're not going to cover this now, but we will take a look at it towards the end. We've got quite a news-driven week heading up on us again, so we want to be cautious of that, but purely from a kind of TA perspective, if we're looking at that and we're saying, okay, we've now taken liquidity from the highs there, we can see there's quite a lot resting over here as well. So something that I like to do is think to myself, okay, not from a liquidity standpoint, but if we're looking for something that's capping the market, right? What's holding the market down? And what I mean by that is I'm looking for a point where price has failed to close beyond it. Okay, so we can see we've set this higher, excuse me, then that's come up here, that's acted as resistance, then we've sold off to the lows. That's telling me that we've got sell pressure above this level. So it would make sense to me to see us run up here, take out any liquidity that we've got above the highs here that could then fuel a move lower. And it doesn't necessarily need to be a move lower, but it would make sense under the current market conditions and the macroeconomic climate that we have, that risk assets are probably still in a little bit of jeopardy at the moment. But that doesn't mean that we can't see a pump into these levels. What's your take on this, Julian?
Yeah, I think it's still digesting the move post that FTX crash, and the market's just kind of waiting out, seeing who else is gonna die or if we're good to recover. But right now there's no clear direction. It's more just a digestion of that big pullback we got over that FTX collapse. So until we get a clear direction and the market ends up having a conclusion on what the price is actually going to be doing, it's just very choppy, honestly.
Yeah, no, I agree. And on all the time frames, I mean, a lot of people have really, really been getting chopped up, and not a point to go into too deeply here, but something that's been covered really, really well by a lot of the other hosts and co-hosts on other webinars is this idea around you really shouldn't be feeling like you have to trade these conditions. If it doesn't hit your strategy, if you're not getting your triggers, then just simply step away. Time out of the market, right? You don't need to see that as wasted potential profit, or that it's actually capital preservation is a huge part of trading, and making sure that you're trading, when your triggers are hitting, when your strategy is hitting, making sure you're fully committed to that is where you want to be. But trying to force trades typically is quite a dangerous place to be. And we will take a look at these on the lower time frames and look at some setups and bits and pieces that we've been sharing with some groups, some successful trades that have gone ahead, and obviously some unsuccessful trades as well. Another big misconception in this space is that people think there's this silver bullet, right, where you've got one strategy or you've got one way that everything will always work. And it's not. It's a lot about risk management, a lot about money management and capital preservation. So I completely agree with Julian here. And just kind of moving back onto the chart for a second, as someone's mentioned about, the possibility of a short squeeze as well. I think the market conditions are overly bearish, which in my opinion is correct, really, because, when we look at everything, we put the context of everything in, it's very, very difficult to see risk assets thriving in the current conditions. But it doesn't mean that we don't get these moves, even within this range, right? If we take a look at this and we take this even between the two red lines that we've drawn here, right, you've still got 9.6% there. That's plenty of room, but it does take a lot of patience, and obviously you have to be expecting some chop in this. So I've been favoring the lower time frames, which really is the way that I trade anyway, so it's been quite suitable. I know Razoon, who's been very similar as well. But, for a lot of swing traders, position-based players and that, these have been, nigh on impossible conditions, right, to do anything on the medium or higher time frames. So we've got those levels here. The other thing that I wanted to cover with you guys, and I just want to kind of delete these at the moment. So I got quite a lot of questions about this, these patterns called inside bars. Right now, I'm going to draw this one in, and then we're going to take a look and we'll see the other ones that are there as well. So an inside bar pattern is when we get this large candle here. The following candle to validate the pattern has to close within the range of this. That means that wicks cannot go beyond the highs or the lows. So we can see here, right, that that's held there. Now, this is the inside bar pattern. When it's formed, so at the close of this candle here, right, this becomes the inside bar candle, right? And let's just do that in a slightly thinner line. Again, guys, if any of this is unclear in those terms, please do let me know. And then this becomes the mother bar. Now, what this is, we treat this like a range, right? So when we're in a range-bound environment, we're looking for price to take out the highs or the lows. If we then come back within the range, like with anything, we're then looking for price to head for the far side of the range. So the fact that we've taken out the lows down here, we've swept this liquidity as we discussed before, makes me think that we're fueling this move higher. Now, say we get this and this does play out, right, and price comes up into here. What we'd be looking for is if price then comes back within the range, then we'd be looking for a breakdown, right, further. However, if price comes out of the range, it's not to say that obviously we look always for a breakdown. That's what we assume, especially with the macro conditions. But if price comes out of the range, what I'd be looking for is something like this, right? Now, the reason for that is because I'd want to see, and I'd want to throw a bit of caution to the wind here, because we've broken out of this range. I'd like to see a retest, something that tells me that what was providing a lot of sell pressure has now been flipped. So a really, really simple, resistance to support flip. Then when we've got that, I then like seeing the high here retested, right? And I'd be looking for something like a fair value gap in here or a retest of this breaker line on the lower time frames. And for me, that would provide us with, a more high probability setup, certainly for my strategy. Now, we do the same with the inside bar, which is this candle here. And we can see what happened as we came down. We ran these lows and then price started to make its way back up. It ultimately broke down, right? But we always hold that theory. The one last thing I'm going to say, just before I get Julian's thoughts on this as well, is that when we're trading ranges, certainly whenever I trade a range and what I've learned over the years, is that we always want to make an allowance for a midline, right? An EQ, so a mid-range. And that can just be done really simply by getting yourself a Fibonacci, your Fibonacci retracement, and then just having a 0, a 1, and a 0.5, right? What that's then doing is this giving us this EQ. And what we can see with this range, if we're making the allowance for the mother bar, is that price when we came into here, we ran this, came back up. If we do exactly the same thing for the inside bar, And let me just zoom in on this a little bit, guys, as well for you. We can see what happened here, right? And obviously we would look at this on lower time frames, right? But price has come in, taken the liquidity from the lows, come back within the range, and then we've made for the range higher. Remember, this is the inside bar, so the thinner lines here. And then ultimately rejected the 50 line, broken down, and then we've sold off. Now, on the 4 hour, this is where we can see the chop a lot more. And even with a lot of these candles, you can see the indecisive candles, right? Lots of doji candles, lots of long upside and downside wicks, signals quite often that you've got low volume volatility within a market, right? Or liquidity. But what I'd like to just zoom in on quickly is if we're looking at this inside bar range, which was our kind of range within a range, we can see very clearly here how price came down, right? We took out the lows. We then closed back within the range. We've had these almost perfect retests down here. That to me is telling me that price is getting ready to move higher. We can then, for an extra layer of, not comfort, I was going to say, but a little bit of more belief, if you want, in the system, I like looking for candle patterns as well. So when we get this bullish engulfing candle here, right? So I focus on the bodies for engulfing candles. So we can see that this body literally engulfs the prior candle's body, right? Which we can see here. Then I know that I've got a relatively high probability trade set up to the midline here to the EQ, right? So then when we break it down on the lower time frames, which we'll have a look at shortly, you can then see how price starts to break down, takes liquidity from the highs and moves down to the lows. When we broke out of this range, we can then see how we get this bearish engulfing candle, right? And this bearish engulfing candle here, which a lot of people would say you've missed so much of the move there. And you have. You can take some higher risk setups in here, but unless you lose this range here, then for me, I'd rather take confirmation here, knowing I've got a really clean downside target where I believe liquidity is resting. And then that way I can trade this part down to here on the lower time frames. All right. So, I mean, Julian, what do you think of this? I mean, I'm someone that sees price action a lot more in sort of ranges and stuff like that. And I know you've got really, really interesting views on the market because you've not only got such a good handle on the FA side of things, which is something that I come to you a lot to add into my own strategies, but you really understand price action well. So kind of like, how do you see this at the moment?
Yeah, I think in price action, I tend to look for like micro trends in general. Like market is always trending in some type of direction, and if it doesn't seem like it's trending, then that trend is likely just sideways. I also find that even with like what you painted out, most patterns try to chop traders out of that range. When a range is too easy, it just becomes too easy to make money because it's a clear top, a clear bottom, and you can just play within that range. But most often than not, you start getting these choppy ranges where you don't quite make it above the top, you don't quite make it to the bottom, or you just make it right past the top or right past the bottom. And then it's just this kind of magic hand in the background, just looking for stop losses and just milking the players as much as possible. So I think in general, most charts at the moment have this like choppiness to it where it's like not quite in the range. It looks like it's a sideways range, but then it looks like it's breaking out or it's breaking down. Overall, I do prefer markets that are just overall properly trending. And here the trend is just too choppy. It is generally a sideways trend, but as you kind of highlighted, we haven't made it back onto those highs. When we reached the lows, we went just below them. And then it just kind of moves sideways in the middle, and taking a trade in that middle section is always the worst because you got high risk and the reward is already capped. So until we see something better, it's just going to be difficult. And like even looking at just the candle specifically off of the low section, when it re-entered, that first candle got that giant wick as if it was just a rejection of the range. It looked like it was going to go back down again, and then it just went completely off the lows on that giant candle. So you couldn't even enter the lows because it was just full chop in that section. You would have
and like you said about the highs as well. I mean, you look at this, like you said about this this massive wick here, and again, guys, different across different exchanges, right? But this move here, for example, like Julian was saying, you've broken down from here, right? At this point, you're really not sure. You're waiting for a retest here. You want to see some kind of some more decisive price action. And I mean, you can see from here, right? This is a classic liquidity grab because you can see how we've taken that high, right? And as soon as price has got there, look at the size of this wick. That's how much it's been pushed down, right? And then you've got kind of this indecisive close right on key support or SR, depending. You're not sure which way it's going to go. And then once again here, you'd be expecting I'd be expecting some kind of liquidity run here, right? So one of these wicks to extend beyond one of these, right? To show that the market's taken the liquidity from the lows and it's ready to move higher, right? Because when I'm looking at kind of like a range or a leg as such a price action, say, for example, from here to here, then what we can see here is that as prices come in, we've set this high, right? So we can see we took that high and then we broke down, right? Then when we've broken out of the range here, we've taken this low. Now, then as price goes up to here, which we can see quite clearly, right, it's taken this high. So then I'm thinking, well, okay, if we're going to break down further at this point, we've taken that. This is the next liquidity for me, right? Now, if we're not running that, then I would expect one of these to be run here. And we can see we didn't get that. Price just didn't come in. And then as Julian alluded to here, we just got this massive pump. Not many people getting on board, but probably quite a lot of people like FOMOing in here. We can see this inefficiency that we've left behind, which for me is something that I'm always very aware of. Right, I expect these to get filled, these inefficiencies. So we had a similar situation when we had this kind of second leg of the pump here. And how I like using these inefficiencies or fair value gaps is the market likes to be in balance, right? It likes to be efficient. So when we see these moves, we expect them at some point to get filled. Now, you might be talking hours, days, weeks, months, sometimes years, right? Especially obviously on the higher time frames. But we can see when we had this move up here, price came back down into this area, and then it's made a move up higher. But again, as Julian's talking about here, is if we're looking at these, and I would consider these here relatively equal highs, right? So that's what I'd be looking for there. Let me just label them up. I'll get rid of this range for a moment as well. So as price is coming up into here, right, I'm saying to myself, right, this is where we expect liquidity to be. So we get this run here. We get this run on liquidity, yeah? If we take this across from here, we take those highs, we can see the highest of the highs has been swept, encouraging a breakdown, right? But then again, we've not really seen that much of a sell-off here, right? We have failed to take out these lows here, failed to take out these lows here, and we've got these lows sitting here now as well. In the same vein, we've got liquidity sat above these highs as well. Now, that to me, compared to what Julian's talking about, when you've got a ranging environment, right? Even when you've got, something like this here, for example, yeah? Now, what you'll notice is the market's moving up in stages. You get occasional sweeps of the low, but then when price starts to break down, you normally be able to see a clean sweep of some highs, then price action starts to break down, right? What you would call, if you were in a range, like a deviation. And when we look and we contrast with the price action that we've got here, there's so many kind of highs and lows that are left, so many areas that price could go. It does make it a little bit kind of convoluted for me. Now, Julian made an excellent point about how the markets are moving quite erratically at the moment. And where we see here on Bitcoin, right, we've come in, we took out this low here before we had this move higher. Now, I really enjoy trading Ethereum. And I know Julian's knowledge of Ethereum is incredibly deep and far deeper than my own, but purely from a price action and a charting perspective, something I was looking for here on ETH was this, right? So if we zoom right in here, you can just see, just didn't get that sweep, right? Just didn't get that sweep. You can see, hopefully you guys can see that clearly. Zoom in much more, but we've got that gap in contrast to what we had on Bitcoin, right? But we saw the same kind of reaction. Now, fine, we've taken out these lows, but for me, the key liquidity is below there. And while we've been taking long trades on ETH, just this kind of little feeling in my mind at the moment that we've still got these lows down here to sweep. I mean, what are your thoughts on ETH? You know, showing a bit more strength against Bitcoin in that respect, but you know, what are your thoughts on that at the moment, Julian? Because we've got Bitcoin, you know, we've run the lows, we've seen it on a lot of alts and that, but you know, ETH, and I know you don't necessarily see it in terms of liquidity in the same way, but for me, I would have expected that purge of the low because there's just so much liquidity sat down here before we got this move higher. And again, it just kind of seems like we're running out of a little bit of steam here.
Yeah, ETH is weird. ETH hasn't even tested June lows, whereas Bitcoin made completely new lows on this move. ETH has held above those lows. It's held up recently, like decently well, with the market just completely getting destroyed. It did have a lot of the merge kind of strength for a while, and then it got sold into pretty hard. But overall, it's just been holding steady. I think a lot of the smart money has been picking up ETH quite a bit lately, especially considering ETH has actually gone deflationary with all the recent news happening. So it's a difficult one. I would say more people are looking to accumulate ETH at the moment versus just trying to sell it. But you look at the chart and it's not a pretty chart. Like, it's just, where do you buy? Where do you get that access on ETH? It's just not the most comfortable chart out there.
No, it's not. And like you said as well, when you're looking at these things and trading them on the low time frames, and actually we'll move to a little bit of a low time frame and we'll take a focus on ETH actually, as Julian rightly says, something that's been showing a bit more strength. We got a couple of comments here. One, and thanks guys so much for your comments and your feedback here. We will get around and take a look at some of these, but we've got one here at the moment from Anson asking about triggers, right? So a couple of questions in here. If price is on support, do you just long? Do you have a trigger plan? So for me, it's really, really important that when price comes into a key level, that I stick to my strategy, I stick to my trigger, right? So for me, that looks like this, right? What I'm looking for is when we get a sweep, and let's take a look at this on ETH, and we can review this and take some live trades that we took with the group as well. What I was interested in here is Bitcoin was showing a lot of strength, right? At this stage, we swept the low, it started to come back up, ETH started to follow. And although I'm conscious of the fact we didn't take out these lows, I do like the fact that we took this, right? The next thing that I'm looking for here at this point is I'm saying to myself, okay, well, we've got this fair value gap here, this inefficiency, which is acting as a magnet for price. And price likes to fill these, right? So if we've taken lows, the next kind of natural thing I'm thinking is, okay, well, where's the next realistic highs that we can be reaching for, right? If we're looking at this as like a range type play, then I'd be looking at these highs up here, right? So let's take this one just as the high of all of them here, right? We've got a lot of liquidity sitting above those. So when we close this bullish candle, right, I would have loved and would have had even more conviction in this if this had been a bullish engulfing candle, right? But it wasn't. But we had taken the lows. We've come from this big downtrend here, right? It seemed like the sell pressure was starting to wane off. It made sense that we would look to push a little bit higher. Now, in my mind, I'm thinking, okay, if we are going to go any lower here, and I do think that we come back for these lows, then it makes sense that we come up to here, take liquidity that's above here before we come down. But as Julian said, really for these kind of things, you want to see clean liquidity. I like seeing like relative equal highs or equal highs, or, a standout bit of liquidity, like maybe like this. We can see the wicks either side are a lot lower. You've got a lot of wicks in this area, right? The liquidity's been run here. This is kind of coming along, but it does give us a target. We take this and we take the low hanging fruit, right? We take the easy targets first. So in terms of how we break this down into triggers, when we close this candle here and we're going into Wednesday, in my mind, I'm thinking, okay, I'm expecting expansion to the upside. Price has made a move. We've swept liquidity on the lows. Naturally, for me, I'm thinking, okay, now we're going to look to take the highs. So if you were waiting, for example, for the move into this, and this is just kind of looking more at sort of Anson's question, as we established we didn't actually touch this low, then some people will put limit orders on these lows. The thing that really puts me off of doing that is you open yourself up for a lot of stop hunts doing that, right? Players that are pushing, smart money, institutions that are pushing money down here to trigger breakout traders, right? And I like to wait for confirmation, right? It means that you get into moves slightly later, But for me, I've always found it a bit more consistent. So if I just take this down onto a 15-minute chart for us. Now, we can see as we come down here, this is our inefficiency, right? This is our fair value gap. And we're saying that's what we believe is drawing price higher. Okay. So we need to make sure we're on Wednesday here so we can see we're still Tuesday here. We come into Wednesday. And then this, for me, is a really, really classic move. So we get this move higher, right? This impulse move. Now, what's important about this move, guys, for how I view the markets, is we've got relative equal highs here. Now, the reason I can't say relative equal highs is because it's, it's an ICT term. Do go and check ICT out. SC, other people as well. But it's basically looking at liquidity and where we believe liquidity is going to be. Now, for me, they don't have to be exactly equal, right? Henceforth, the term relative equal highs. But what we're seeing here is we can see as we've come up into here, we're expecting some kind of reaction because price has got here once, rejected, come here a second time, rejected again. So when price then hits here, which we see with this candle here, we get this strong rejection. So if we're now expecting price to reverse, we'd want to see a break of market structure to the downside, which we don't get. Okay, we have our low, higher high, higher low. Now, this move here is so important for me, the strength of this move, because it's telling me that the market's ready to move higher. This typically is bigger money, institutional accounts, bits and pieces coming into the market. And that's why you get those big moves. Now, I don't like playing these moves in terms of jumping in here because I don't really feel like I'm getting good value in the entry, right? So what I'm looking for is when price retraces into here, all the time considering my high time frame bias. My high time frame bias is bullish. We've got the big inefficiency here, this fair value gap. We're targeting the top of this, okay? So now I'm saying to myself in the same vein, well, okay, if this is our fair value gap here, our inefficiency, and we expect price to be drawn back down into that, I would typically execute this on the lower time frames as well, guys. But just to show you this on a 15-minute, again, I know a lot of people can't spend the time behind the charts to scalp 5, 3, 1 minute charts, right? But price is fractal. So, you can look for these setups across different time frames. And let's just change the color of this very quickly. So as price comes into this area here, the way that I trade is pretty much always the same. I'm either looking for a pullback into a fair value gap or I'm looking for a retest of a breaker line, and I will quite often split my orders between the two. But looking at the breaker line here, we're bullish here, right? So we don't want to jump in here because price is already starting to run. The chances are we get a correction, and that's when we want to jump in. If we don't get it and the market just moons, it's fine. We wait for other opportunities, okay? But what I'm looking for is a low to be swept. So we can see how we sweep this low. Let's do this in red so it stands out. Now what I'm looking for price to then tell me it's ready to go higher. So I'm looking for the high that sweeps the low. Now, it's just a term that I made up. It helps convey it sometimes, certainly helped me understand it in the early days, but a breaker line. It's our break, and we're looking for this, again, to have this impulsive move through it, right? Same as we said with this candle here, the strength of the move through it means a lot, how dynamic it is. Punches through. And that's saying, okay, we're getting ready to go a little bit higher. So in this respect, obviously we do this on a lower time frame, but you can see here how you can still control your risk to reward. If we're entering even by the retest of this, I would wait for the close of the candle above it. Then I would execute a limit order on this breaker line here. My stop loss will always go under the prior swing, right, which is here. And then, as we said before, we've got a clear target up here. We're expecting the fair value gap, the inefficiency to get filled, and we would just monitor price as it goes through here. We would look to close out some of our position here, certainly move our stop loss to entry, all right? So then we're risk-free on the trade. And then I would hold a portion of this trade until we got the market structure break, which we got over here. All right, and we can see how price then broke down. And at that point, we can then exit our positions here. And, we got a 2.4 trade up to there. Let's say we exited down here. We don't want to cherry pick. We've still got a 1.91. Exit heavily on our first target. We then hold it because we don't know if price is going to move up for these highs. When it breaks back down, then gives us a good chance to exit and still book some good profit. So if we take this back out to the daily again, again, not losing sight of our context, right? This is all based on the fact that my story to myself is that we've taken liquidity of the lows. And if we've taken that liquidity and price is hunting liquidity on the other side, then where's the most likely target? We use our inefficiencies, our fair value gaps as a draw on price. And then we're looking for the most likely liquidity, which for me is over here. Now, again, we've got the power of hindsight here, guys, which is why I like to make my strategy super, super simple. I'm simply looking for sweeps, for price to then hunt for liquidity on the other side, which we see here. Now, before I hand over to Julian to get his thoughts and maybe some input from the on-chain, I just want to show you how this works, right? So here's our liquidity sweep here, right? Price comes down, we've got a clean and clear low, price takes liquidity, price moves higher, right? What's drawing price higher, in my opinion, are these fair value gaps or inefficiencies, right? And we can see here, by having those as clear targets, the opportunities that we get. Now, you don't always get the full fill, but you often get quite close to it. And that's why we monitor the market structure on the lower time frame, so that we know. Now, just so you know, I'm not just cherry picking this, and I really suggest that everybody goes away and looks at these things and tries them out, right? We can see a similar thing here. Clean liquidity, swept the highs, broke down below the lows, we trade lower. And for me, if we take liquidity above this high, my next target becomes this low, right? And then if we're going to continue to break down from there, then we're simply looking for targets lower down, all right? So, I mean, Julian, what do you have? Because I've seen you trade some unbelievable charts, actually, in terms of the price action side. And obviously my naivety, I would imagine, is just a very simple price action trader, but I've not... I know some really good fundamental analysts that don't really consider price action, right? But you've got a really unique view from both sides of it and a really detailed view. So what are you looking at in terms of that? I mean, are you looking to kind of on the longer term things, are you looking for specific levels that you're looking to buy at? Or are you doing something similar and kind of driving into the lower time frames to find these breaks of structure or these liquidity runs or bits and pieces like that?
I honestly do a little bit of both. It depends on the time frame I want to be trading at. Like if I think there's going to be enough volatility in the short term, I'll hop into a 4-hour chart. I don't like going much lower than a 4-hour chart just because I don't like sitting and staring at a screen. Overall, I do prefer looking at the daily, that there's just less noise in general with the daily chart. I mostly like just looking at very big horizontal levels and playing off of those, and then looking at patterns of break of structure where it's, a break of the lower lows or break of the lower highs or something like that. It's what I tend to look for overall, or a break of range in general. Yeah, with this,
and that's kind of all playing into your high time frame, though, right? You're using, like you said, you're using the daily really to lead you here, the cleanest structure that you've got, and then you're looking for entries and bits and pieces based on that kind of high time frame. So if you're bullish, for example, on the daily, and price has just reclaimed a key resistance to support, then you can wait for that market structure break on the lower time frames, right, to then trade it higher into the level where you think's the next viable target.
Yeah, exactly. I like kind of watching those bigger time frames, and then getting a better idea of the general direction. Then you can actually get a proper trend of the overall market. And I kind of make fun of it sometimes because I posted a chart a couple weeks ago of just Bitcoin being, or a couple weeks ago, it was still at the same price it had been in June or something. So
I remember the post, actually. It did make me chuckle. Yeah, that you could have. What did you say? That you could have just spent this time going outside and doing fun stuff.
Yeah, you could have done anything else and then come back and Bitcoin was at the exact same price. Of course, if you're trading the 1-hour chart, you always lose perspective, the trees against the forest type of deal, because it just looks like so much is happening when in reality it's nothing really happened over the summer. Ethereum has been a little different. I'd say generally right now the trend is going down, and to really break that trend, it's going to have to push towards that 1700 or have to make some higher low type pattern
Mm-hmm.
or range or something. It's just been very weird. I really loved the pattern it made back in June, July.
Mm-hmm.
And I actually longed it pretty strongly.
Mm.
Because it had formed that bottom. I think it's like a triple bottom. I think it made, and then
Yeah.
it kept rejecting off the top of the range, but it was just a proper straight range. It was
Mm-hmm.
very clean, and as soon as you got the breakout out of that range, it was just a straightforward long, and
Mm-hmm.
it basically moved all the way to 2K from that
Mm.
1200 area.
But like you said, though, right? You've got that clear thing in your mind, and what you're talking about there are actually two really, really good points. I think that most people could take something from there, which is one is what you're looking for in terms of when price is coming in. Like you said, it pretty much kind of like set that like triple bottom, didn't it? And then, like you said, when it's then attacking the highs of that range, as price is going in, if you're not getting those really aggressive rejections, price is just knocking on the door there, then you're saying to yourself, okay, we're really trying to kind of do something here. If we break out above that and then look like we're starting to hold, that's when you want to start getting interested in going long, right? And I think sometimes the risk, especially in these kind of conditions, is that people either are getting so used to expecting these rejections at this point that you get a lot of people shorting at the top of the range there, and then you get that little bit of chop, and then you get these explosive kind of counter moves where it really, really goes off. And then the other thing that you said that I think a lot of people can take something from is about Bitcoin over the summer, right? You know the way that you want to trade, you know your strategy, you know your time frames you're looking for. So you're not just sitting there just killing yourself on the charts every day, just trying to take things lower and lower and lower on the time frames, looking at all this chop that's going everywhere. You're saying to yourself, look, I know where this comes in. I know where my strategy is successful, and I know what my triggers are. I'm gonna wait for this to come into here. I'm gonna do other stuff, whether that be research work, getting in the fundamental side, right? Is whether it's, as we all like to do, you're always learning in this game, right? We're always all evolving. So you can really make sure that your time is spent really constructively. And actually, the whole kind of slogan around Congress, the best time is now. The whole point of that is that it's about how you utilize your time. Right. So you can sit there pointlessly staring at 15-minute or 5-minute charts or whatever and wondering if you can catch these trades and you get chopped up. Or you can spend that time doubling down on your education, right? Sharpen up on stuff. You look at the tools that you can use to expand your arsenal, go over your material, work on your journaling, look back on what you were doing, and really, really make sure that you're preparing yourself, you're taking on new skills. Now, we've got quite a lot of questions. So I just want to answer a couple of those. Don't want people to feel like they're being ignored. Guys, I know you've had some really, really lovely things said from earlier. Please do re-ask them if we miss them out. We'll try and get in as many as we can in the next kind of, 5-10 minutes before we shut this down. Now, we covered the ones from Anson about the idea of whether we're just longing or if we have a plan when we get to a support resistance. I certainly do. You can hear from Julian exactly the same as well. We're looking for these trigger mechanisms in order for the market to kind of give us a hint in the direction that it's looking to move. That's all kind of wrapped and framed with a high time frame bias. Now, we've got a question here from Rick Veal. So, BC, your idea of a sweep is to sweep below the last low, even a little. That was a near tap, not a sweep, ? So, yeah, for me, Rick, I'm not sure exactly what part you're talking about. If you're talking about here on the high time frame on the daily with ETH, we definitely didn't take out those lows. But on the daily, we swept the prior day's low. Now, a big part of how I trade is I'm always looking at prior day's high, prior day's low, Monday's range, right? I find them to be quite powerful for me. I also look at daily opens a lot. So if I'm bullish, as an example, I'll just quickly show you this. Now, if I'm bullish on a daily scale, right? Now, let's just use this leg here as an example. Price breaks the structure here, right? So take out this. We've come up low, high, higher, low. We take out this structure here. Again, a good impulsive move through it. Now, I'm bullish here, right? Because market structure on the high time frame is telling me that. What I want to see are clear upside targets. And I won't go into too much detail on this again because we've covered it. But just very quickly, my initial feeling would be that we would be coming up to rebalance the market here from this fair value gap. And this actually answers another one of your questions as well, I think, Rick, or one of our other viewers who asked about fair value gaps. What this is, because it will give context to this next point, is the fair value gap's a 3-candle pattern, right? Or a 3-candle move. You've got this candle, the second candle, and the third. What you'll notice when the market is moving efficiently, like here, for example, as we're grinding up, is that the candles cover one another with the wicks or the bodies. So the 3 candle patterns, there's no gaps. When you get an impulsive move, right, you tend to leave these gaps here, right? A strong move. So this wick and this wick don't overlap. That's an inefficiency, right? Or a fair value gap. We expect that to get filled. Now, we then put that in with the context of when the market has swept some lows, as we get here. We've got this key low here. This is swept, right? Price then gets into a bullish structure. We have our break of structure here to the upside. So I'm then looking to trade this to my clear, clean target, which the first one is this, okay? Now, what I want to see, and I'm zooming right in here, is I want to see price open, right? As we got the open here, this is for this candle, trade down, yeah? So our daily open would be here, price trades down, and it gives us the opportunity to find entries, right? So let me just show you very quickly on here. Here's our daily open, which is obviously matches the close of the prior day. So I'm going to do it on that one so it really stands out. Mark this up as our daily open. And then I'm just going to use replay mode here, guys, which is something you can use on TradingView. It allows you to rewind to a certain part of the chart. Really, really helpful when you want to kind of test strategies. And also when you want to switch to a lower time frame from a higher time frame and not obviously grind back across miles and miles of charts. So I'm going to drop this down onto a 5-minute for you so you can really see the structure. Now I'm going to pop on my session breaks here, guys, which you can do here with this little type of sun symbol that's down on the bottom right. And you scroll down, you can go to session breaks. Now, what we get with the session breaks, and I hope you guys can see this, is we get this grey line down here, right? So that lets us know when we're back here. Obviously, it's 1 a.m. here because we hadn't had daylight savings. After 1 a.m., then it goes back to midnight, right? So again, exactly the same entry techniques I was talking about. I want to see a sweep of the lows. I want to see the high that sweeps the low closed above, and then I'm looking for entries, okay? So here we have our open, daily open, which is right here. I want to see price trade down. I want to see it take out the lows, which we get here. And let me just get rid of that for a moment to make this a bit clearer. We've taken out these lows. This here is the high that sweeps the low. And once again, we're going to label this up, breaker line. You can call it absolutely anything you want. Just for me, that helps it make sense. And then price is then telling me that it's ready to move higher because we've come down, we've taken liquidity from the lows, we've got our bullish high time frame bias, price then closes back above this, then we're looking to take our entries. And again, we can take our entries on this, on the line. So when price closes above, you can enter when it retests this, you set a limit order, which helps with your fees as well. Or we can look for a move down here when we're coming in to fill these inefficiencies on the lower time frames. So in this respect, right, then we're going down here and we're saying to ourselves, okay, where have we got these inefficiencies? We look as low down from the origin of the move that we can. And obviously it's a higher risk trade because you might not come all the way back down to fill these. But you can see down here, price dips into this because it's got people long up here. And people that get too tight with their stop losses here can get punished. If people are putting their stops under here that are going long here, the market quite often wants to purge those people out, use that liquidity. And then the move higher that you get is so impulsive and strong. It's then very, very difficult to get back in. So I hope that answers your question, Rick. But yeah, for me, when price is moving into a level, I just want to see a sweep. Right, so it doesn't have to be a really, really deep purge into that sweep. Yeah, it can literally just be a tickle, right? And then from there, I'm saying to myself, okay, if I get the reaction that I want to see, I'm then looking for confirmation, and then I'm pretty confident, or I am confident the market's going to make that move. I'm definitely not always right, but with good risk management and sticking to that strategy and those key triggers allows me to be consistent. Okay, so let's just take a look through some of the other questions as well and see if there's anything, because I know you guys have got a lot for Julian as well. So we've covered that on the sweep. One here from C-Ron, just a very quick one. If your limit order doesn't fill, do you put that down to good TA and on the next, or try not to be so accurate and aim for areas more? So yeah, basically, if I don't get that retrace to the fair value gap or to the breaker line, then it's fair enough. The market's taken off without me. I take solace in the TA that the idea in the principle of the strategy was correct, but the execution was slightly off. Now, I'm not going to start over analyzing things at that stage if, you know, I back test these and trade these for years and years, right? But if it starts to become consistent, and this is where journaling is so key, then what I'm doing at that point is I'm then looking to my journals. As I'm going through it, I review my journals weekly. If I notice it's becoming a pattern across a lot of trades, then I'll look to it and think, okay, is there something wrong here? Why these keep getting front run? Do I need to adjust something? But apart from that, unfortunately in this game, you've just got to kind of take it on the chin. And then question here from Jedi Cole. Hey, Jedi, how you doing, buddy? Been a real patron of the streams. So validation for entry on 1 hour, 50 minute, 5 minute example. Where an entry would be lovely. So hopefully we've kind of covered that. Just again, very quickly, if we're looking at this on a daily scale, I'm looking for my daily bias. If we sweep lows, then I'm looking for us to find liquidity above the highs. I'm paying attention to prior day highs and lows to look for those sweeps as well. But then my bias when we sweep here is up here. All right. So as we're trading up to here, I'm looking for the day to open. I'm looking for price to pull back into a key area, get that liquidity sweep, and then trade higher. So thanks very much for the question, guys. This actually, I can help you out on this one as well. Frau S. Hello, boys. May I ask you a question, please? Do you use an indicator for time sessions? So I use session breaks, and then I'll introduce you to another indicator, not something that we've got any affiliation with, right? Just a person that's made a really good indicator that I use on TradingView and I'm not sure if I've captured this right. If you're talking about general time sessions, we're looking at your session breaks to take the days, right? If you're talking about it in regards to kill zones, which is something that ICT teaches, people on here probably know that was a big part of my mentorship when I was becoming a professional trader, that and Trader SZ. And ICT teaches trading around kill zones, which are specific times around the London Stock Exchange and New York Stock Exchange as well. So if that's what you're looking for, buddy, then session breaks, you can find them down here, this little sun emblem, right? And you can pop them on and off there. And if you're looking for, and I just put this on a lower time frame so that you can see them, there's this indicator here, which is called ICT kill zones, all right? And the principle is that you're looking at trading on the side of smart money, which ICT calls it, which is institutional money, and the algorithms and, you know, the banking institutions that are placing these larger orders. And the idea is that you see this New York session here and the London session, and there's a lot of rules around this. I'm not going to go too deep into it, but if you're looking to study these, then as you're looking back, what you're looking for is how key these reactions are here. So we can see here in London, New York, we sweep these equal lows here, we get the reaction, we come up and we take out the liquidity above these highs, right? Now, as we've got in here, and this is obviously a pretty insane wick, but again, London and New York take the liquidity above the highs. That's when we get the breakdown to the lows. I'll give you one more example just to show you that we're not cherry picking these. And again, really, really advise you to go away and try these yourself. But we can see here as we come in, London, New York, we take out the lows here, price trades up, comes back down, I would imagine on a lower time frame inefficiency here before trading up higher. So just to put that in perspective for you guys, that is just called ICT kill zones by a really top guy, makes some brilliant indicators called Tradinator, who obviously has the Terminator, the original Arnold Schwarzenegger, as his logo, which is awesome. Huge fan of the 80s films. So hopefully that answers your question there, buddy. And we have got a real load of questions coming in, guys. So I'm really sorry if we don't get around. Yeah, real loads of people watching the stream. Thanks so much, guys. Please do smash up the likes if you're enjoying the content. Yeah, entry points, brilliant. Everybody's coming in, top job, awesome. So guys, loads of really encouraging comments. Thanks so much. Really loving the fact you guys have been enjoying Congress and all the love that we felt coming across. Hopefully it gives you guys a little bit of insight. I've rambled on like a madman, like I normally do. So I'd like to hand you over to Julian. I mean, Julian, is there anything sort of like parting wise, any alpha you'd like to leave these guys with? Because I know you're absolutely chock full of it, and I need to give you some time on the mic because these people deserve it.
No, fair enough. I think overall with the market, I would mostly be paying attention to what is holding up, but with a lot of the recent activity, I've spent or turned most of my focus towards like Bitcoin and Ethereum, honestly. Just it's more of a time-based thing at
Hmm.
this just at this moment. The market can be so wild that those two have been through so much that you kind of
Hmm.
know they're going to be around for a good long while. It's a really good time to consolidate portfolios, really good time to just really clean out the closet and what you're holding, and consolidate in something much better. And then overall, if you are looking to buy, like don't be desperate about it.
Hmm.
I think a lot of people are really desperate to buy, to trade.
Hmm.
I think, and most people forget that every time you open a trade, you are opening yourself to lose money just
Hmm.
as much as you are to win money. So people always think, oh, if I open a trade, I'll make money, but you're also putting that same money at risk.
Hmm.
So just minimizing your risk exposure is just as important, and especially in market conditions like now.
Hmm.
Sometimes sitting in cash for a month is way better than taking on 15 trades that maybe one went well and four didn't, and then all the other ones got stopped out. Like it's just cash is also a trade, and
Hmm.
it means you're just taking care of your holdings.
Yeah, I think that's a really, really good point as well. Like a really, really good point. People are super, super keen to trade, and people are super keen to invest. And there's also a lot of noise around. Okay, so something I always advise to people is you find good people to learn from, find a good community to be part of. I love the community that we're part of here at the Bird Nest, right? And hopefully you guys have got some value out of this. But it's really, really important that you find those people, because you don't want to. There's a lot of noise, Twitter bits and pieces, people saying you really need to buy now, etc., etc. Um, but I just you've got to make up your own mind, right? You don't want to be led by people. Something that we do is, yeah, we provide cool services for people. The whole point of that is that people have the ability to make a little bit of money whilst they're learning. But the whole end game is that you're not reliant on anyone. You have to be able to do these things yourself. And whilst there are obviously some really good bargains to be had in comparison to where we were in the bull run, as Julian says, there's a lot of these projects you don't really know even if they're going to be around, right? So you need to really, really do your homework, really, really do your research, right? And I really can't recommend highly enough following Julian on Twitter, which I believe is at King Julian Amaya. If you can just pop your Twitter up, Julian, because this guy triggers me off to all kinds of things that I trade, right? He caught all kinds of amazing moves that just means that I can just step in, look at the fundamental perspective, which I've got no expertise in. And even if I had knowledge, I've got an expert in the matter next to me that I can rely on, right? So I don't then just blindly trade that. I then still need to overlay my strategy and my triggers, right? And that's what helps you get this kind of consistency. So just before we finish up, I think that's a really, really good point. Look, trading has this addictive feeling to it, right? And the problem with that is that you want to get on the charts, you want to look, but really focus that energy into your education so that you're trading the most high probability setups that you can, whether that be that you're investing or you're scalping low time frame charts. Really work on mastering your craft and building that independence, right, in your own theories. And we just got a question from Frau who asked about the indicator. So that particular indicator, the ICT kill zones one, yeah, that I just went through on here. Let me just pop it back up for you as well so you can get that written down from Tradeinator. Okay. Again, no affiliation with these guys, just one that I found really helpful. These are, and the reason that I bring this up is that um, Frau has just asked, do I need to adjust the time? And about the inputs. So no, the good thing about this one is that it does that all automatically based on your time and with the settings that you've got on TradingView. The guy's also super, super good at getting back to you if you've got any questions. And funny enough, recommended one of my favorite indicators or talked about it. It was back here somewhere. Maybe I've missed it, but it was talking about Igor sessions, which was a fantastic indicator that, funny enough, I do still use, but it has been taken down now. So there's no updates or anything coming out. But basically, guys, what you're looking for are those kill zones. So if that's the type of way that you trade, I always recommend you do your homework. By all means, come and drop by the Nest, ask me questions about it. I'd be more than happy to speak you through how I interpret that and certainly how I trade it. But again, all about the education side, guys. And about doubling down on that at the moment in these current conditions, as Julian is saying. Don't be too keen to throw your money at the market, right? Because as he excellently pointed out, you might have lost goodness knows how much, like a lot of people have in this point of trading. All of a sudden, that stress, the impact that you take, the mental perspective of it as well, that can be damaging in the long run, when you could be, not sitting on your hands. It doesn't mean just sit back and do nothing. It means allocate your time to other things. Make sure that you've got your trading mindset in place. Make sure your journaling is really red hot. Spend time outside, see family, refresh yourself, because when the markets are hitting your triggers and when they're hitting your strategy, you really need to be immersed in them, in my opinion. And then when they're not, that's the time you to refresh, you educate yourself. And I think that's a really, really good closing point there from Julian. So that's been everything from me. Thank you so much for everybody tuning in. Julian, did you have anything else before we say goodnight to these lovely folks?
I think they should definitely check out the Discord. We still have the Congress chat going. They can ask any questions they had, and then definitely check out all of us on Twitter and follow the YouTube. I think someone was asking about other Congress videos. There's so much content from Congress this past week. It will be on YouTube. It already is on YouTube, but we will definitely be talking internally with the team about having a proper playlist for everyone so that they can just binge watch everything.
Yeah, absolutely. And there's been so much great content. The session before this, the sessions that have gone on. Guys, the whole point of this, we've got our closing ceremony, if you like, happening tomorrow. We've got some really cool live streams. We've got team live streams coming up as well. So do try and be part of that if you can. Again, if you can't, then do come along and check us out and watch the videos when they're uploaded. Come along to the Discord. You can get all kinds of trials. You can get some amazing Black Friday offers at the moment, which I'm just going to put up on here at the moment. So down at the bottom, if you guys have got anything, go along, check them out. Some amazing Black Friday offers. But there's trials, there's all kinds of bits and pieces. Do be part of Congress. Come and sign up. If you're watching this on YouTube and you're not signed up, you get all kinds of goodies. There's PDFs, there's strategy guides. Everything's for free. You get entered into prize draws, all kinds of bits and pieces. So come and be a part of it tomorrow if you're around. If not, and you have tuned in, thank you so much for being part of this. We hope that it's given you guys just a little bit of help, or certainly some support, or maybe even just a forum to just vent your frustrations on, all right? But as Julian said, come along, check out the Discord, follow the guys on Twitter. If you've got any questions, don't hesitate to ask. We've got a packed schedule coming up tomorrow. It will be released and announced in the morning, 11 a.m. UTC. And until then, I'd just like to say a big thank you. Have a wonderful evening. Enjoy the football if you're watching the football at the moment. And apart from that, Julian, you'd like to say goodnight to the folks, and we'll see them tomorrow.
Yeah, good night. We'll see you guys tomorrow, and enjoy the game later.
Take care, guys. Bye.